So Alan, we're off to North Dakota and the shale oil fields where Whiting is buying Kodiak. Now usually if I were a Kodiak shareholder I'd be expecting a premium of the share price, but Whiting has offered a discount. What's going on?
Well, it's a good question. The first thing we should say is normally you wouldn't be very pleased with a discount. The discount works out to just over 2% on Friday's closing price. But it's fair to say that Kodiak's share price is at all-time highs. It's probably been looking for a buyer for some time, and I think the market knew that. The oil production has been growing at a decent pace, but that at least the rate of change will be slowing down, and I think everybody can see that Kodiak needs more money to get up some of the reserves that they say are proved out of the ground and, into the pipes and generating revenue.
So can Whiting provide it with that money? Is this the influx that it needs?
Well, Whiting they're not heavily indebted by any means. I mean, they're sort of 1.4 times net debt to EBITDA. The combined company, though, will actually go up in the leverage slightly right away to 1.6 or so, maybe 1.8. The issue here is that neither company really has positive free cash flow. It's not unusual for a growing oil company's E&Ps, particularly in the United States, to be spending above their operating cash flow. That's not unusual, but it just seems that Kodiak needs more money to get what it wants to do done. Whiting doesn't have any more cash flow either. So when we put these two together, it's not like we have a cash-rich company helping out this fast-growing minnow. In fact,
what's the rationale?
Exactly. Well, the rationale is to rationalize. Okay, they're both sitting in very similar acreage near each other. At the end, the pro forma combined company is going to have 80% of its production, oil production, coming from this Bakken Three Forks area. So they're hoping, I believe, Whiting is hoping that they'll be able to rationalize costs. The analysts will be asking, they're already asking, are you going to be selling assets? It sounds like they probably will need to. Are you going to be cutting costs? That seems obvious. The two companies together just don't have the cash flow to do what they want to do.
Well, it sounds like even though it's never nice for shareholders to have to accept a discount, maybe Kodiak shareholders will have to grin and bear it. Alan, thanks very much.